Okay, so you're back again. So in this episode, we're going to be talking about technical analysis on what to expect this year on gold, and this how, as well as this is also going to be how to study price action as well. So in continuation from where we left from, I think last time I checked, I told you guys that you were bullish, and as you can see, the PJ rates that I was marking here, price kept on rebalancing and reacting from them, and nothing has changed. Gold is still bullish in higher time frame, like the overview of it is still very bullish. So whatever you're seeing here is because gold has had just hit an all-time high, that is 4,549. For the first time, gold hit 4,549.52. And that being said, that was all-time high. In other terms, we are currently at a premium level. So being on a premium level, and we had taken liquidity above here. Let me mark this liquidity point. There was liquidity rest in here. You see this one here? We took liquidity right there, and we have that aggressive move above it, creating this gap here. But price started closing back in on Monday this week, and this drop was very massive. This drop was very massive. I'm gonna show you a technique if you wanted to trade this drop, you would have traded it and made money. I'm gonna show you right here so that maybe next time you'll be aware. And I'm going to be using an ICT concept of silver bullet. It's right here. So that being said, once we took this liquidity, we went a little bit higher and we created some gaps here. This gap shows how price is really interested in going higher. But the moment on Monday, we dropped below it, and as you can see, we disrespected it. You see this one here? This is how I read the price, guys. We disrespected it. Disrespecting simply means that the body of that Monday candle, the body of this Monday candle, displaced its body below it, meaning that price is interested in something lower. So if we are selling, because as of right now, I'm expecting some sales, your first question is, where are you targeting, or where are you selling at? Because gold is supposed to be buying. So if you were really looking for high probability, like you don't want to be interested in anything to do with sales, like you're afraid or you're fear, then definitely you should be asking yourself a question. If we're selling this gold right now, where are we going to? We're going to be looking for PDRA next to this one. This one was invalidated. So the next one is just right here. This bullish fair value gap. You see this one here? Boom, this one. And this is our target. So I'm expecting price to come down here, balance this fair value gap, and I'm going to be watching how the daily candle closes on it. If I see consolidative candles of daily time frame around here for a couple of days, or maybe one or two, and they're constantly respecting this bullish fair value gap right here, then I'm going to be positioning myself for longs, and these longs can stay for months. I want to take a look at what really happened this year. This is the year of 2025, right? Let us take a look at what really happened here. Oh, okay. Seems like I had some markings on this early, early year here. Okay, that's right. Let me just remove a few of them so that you can have a cleaner chart. So I want to take a look at what really happened this year. So for example, this was December 2024. So we went to January 2025. Okay, January 2025. Okay, December. Perfect. So we opened on. We opened on. Let me just use this one to mark. Right there. It was second. That's when the markets opened, and it was second. Sorry, just a minute. It was second on Thursday, right? So as you can see, guys, for a person who understood what was really happening here, for example, let's say in 2024, let's assume this was the kind of market structure. So a person, you're gonna be asking yourself, okay, this is the January right here. So we closed here in the previous year. So we're looking for a way of entering this market. The question would have been, we had a gap somewhere right here. Let me show what really happened. We had a gap. It was a little bit late. It wasn't that big, but it was a gap. Yes. And if you take a look at how price structured this gap, it disrespected it. Take a look closely. It disrespected it. Okay. So disrespecting it simply means that it shows price is likely interested in something higher. But on the other hand, we had also this bullish fair value gap here, which price was just coming from, but it never really filled it completely. You see, it really never filled it completely. So we had two options: either for price to come down here to finish the job, or go higher. But based on this, on how we closed the year, closing the year based on these two PD arrays, we disrespected the bearish one. So if we disrespect the bearish one, simply means that we're interested in going higher. But if we disrespect the bullish one, simply means that we're interested in going lower. The way we have disrespected the bullish one right here, coming this year. Let me show you again. This one. This one. Right, come on. Seems like I have a. Let me just use these two. Seems like I have a lot of. We are too far away. Oh my goodness. This gold has really moved. You see, like this one here. So we've disrespected this bullish one. So price is likely interested in something lower. But if we disrespect, for example, price start going higher right now, then we come and disrespect. We also have another gap here. Let me mark it. Although now this chart is going to be a little bit dirty, but hope you guys can be able to understand whatever I'm doing. I'm going to mark it in red, the bearish one. So if we come back here and disrespect this bearish one immediately and close above it, that simply means that we're not interested in anything lower. We're supposed to be looking for now buys, and therefore we can use even this gap as an inversion fair value gap to buy. Okay, now let us go back earlier this year. What really happened? Let's go to January so that you guys can be able to understand what's happening right now and how you can be able to make money. So imagine this was the first day of the year, to second on Thursday, January, right? And given the fact that we opened here after price had already disrespected this gap, okay, on the previous year, on December 26th, and Monday, for example, trading on the first day of the year is not really such a good idea. But we wait and see, for example, this day, let's assume you never traded, but as you can see, we displaced above that gap again. And this was a heavy displacement towards the upside, meaning that the buys were really in control. Gold was really interested in going higher. Okay. So that being said, we created another gap here, almost the same level as the other gap. So meaning that we can use this gap as an inversion to enter. So assuming that a person who wanted to take this trade was looking for longs from this gap, when price come to rebalance that, then your stop loss is just below here. For other people who want to put proper swing trading, it would have been around here. You see below this low right here. Yeah, right there. That's a lot of pips. But you see now, this is the type of trade you can let it run for the rest of the year. Let's see people who will let it run for the rest of the year. You see what happened? Just take a look. Take a look. Just see what happened here. So you bought there, it's a swing position, and you let it run for the rest of the year. And you see, this kind of swing positions, you can put a lot of money on them because once, this is a very huge breathing space for this market. So in case it wants to come down here and do, finish the job on this gap, your stop loss is down here. But for the smart money traders, we be like, no, we're not putting it there. We come and put it somewhere around here because we understand that this gap is supposed to be protecting us, okay? If this gap is invalidated, we position ourselves to buy again below here with our stop loss right here. So if you would have done this, just take a look at the reward. And you just put a swing position and you don't even touch it. Imagine this person, if you don't even touch it right now, whatever gold is doing right here is still, trust me, gold is headed towards 10,000. That's what I'm envisioning. In the next few years, maybe 2 years from now, gold is going to be around 10,000. Because think about it. In the last few years, gold was merely like 2,700, 2,000 something. I think 1 year or maybe 2 years ago, just maybe 1 year. Actually, it was 20. Just recently, gold was 2,000 something. This 2024. Yes, 2024 actually. Gold was around 2,000, a year ago. But you see right now, we're on 4,500. We headed to 5,000. I expect it to tap 5,000 before mid-year. I expect that to happen. Then after mid-year, now let us start envisioning for 10,000. So mean that if you buy gold even right here, right now, so this is how you can position your swing positions. Now let me show you. I would like us to tap into this gap here because based on price action, it is clear that we are interested in going lower. So going lower, the first question is this one. If this one is disrespected, then we have to look closer because that simply means that there's a problem somewhere. We might be interested into something way lower than this. But, for example, this one here. But I won't really like us to come this low, especially given with the geopolitical factors going around, with the politics and so on. So I expect us to bounce from this gap here. So that being said, once you see the price action, what's going to be happening from here, how price is going to be behaving, you can position your buys from this gap, put your stop loss below this lows right here, this one here. Then, ladies and gentlemen, you can target your first partial here. That's 1 to 4. Then let it run for the rest of the year. You're going to make a lot of money, a lot of money. Just let it run for the target, even 5,000 maybe as your second position of take profit. Then you can let it run for the rest of the year. Even if you want, let it run until 10,000. Okay. Yeah. Once gold hits 10,000, that's when you're going to be having the issues like the ones you're having with the Bitcoin right now. You see, Bitcoin is kind of playing some games with people, up and down, up and down. And you see, that is a rally that is in preparation. Trust me, Bitcoin is about to shoot again. In the next few years, it's going to be really, really bullish. So as of now, it's shown that Bitcoin was too, it had moved. That's the nature of price. We balance and rebalance PDRs. We balance and rebalance PDRs from premium to discount. That's a secret. That's how this thing moves. Okay. So finally let me now talk about how you'd have positioned for these sales on Monday. I'm not really gonna give you guys exactly the mathematical side of it because that will make this video too long, and as I promised, I'm not going to be talking about, because the moment I post this thing right here, tomorrow you find somebody selling you mentorship about with my model, and they be like, no, I'm the author of this because they see it's really good, it's working. So that's why sometimes I kind of hold back. And I think this was among the reason why ICT was also holding back until he had like around maybe close to 1 million, or like a substantial number of people who are now watching him now, would be would testify. No, this guy is the first person who came across this, because right now, trust me, there's a lot of fake gurus over there. If I dare post my my mathematical side of trading right now, a lot of people are going to be making videos about them and claiming to be the authors of them. I've seen them. Very funny characters. So that being said, let me just give you a quick overview of what was supposed to be happening. Actually, based on what I taught you guys about how to determine daily bias, I was expecting buys from here this Monday. But remember what I also said, that I don't usually use a new week analysis based on a previous week analysis, meaning that I don't use previous week analysis for a new week. So Monday was a new week. So I could not use this previous week analysis to determine what's going to be happening here. But based on price action, let's see, for example, hourly. Let's see what was happening here. And there's this indicator. I don't know if it is here, but let's just see, the Asian, and yes, it is right here. This indicator. So I'm going to be using this for you guys to be able to get it. Okay. So this is where we opened this Monday. And when we opened on 15 minutes time frame, you see there was that aggressive bearish move. But unfortunately, I think just forget about this indicator for now, because you see the problem with this accumulation, manipulation, distribution, sometimes that they don't usually work, especially when you're on the wrong side of the bias. Because, for example, if you're waiting for to buy once liquidity of Asian session has been been tapped here, but of course for you to buy, you have to wait for breakout structure somewhere, which we did not get. Okay. So in case it continues to create gaps below, then you start positioning yourself for sells using those bearish gaps. So for example, in this scenario, we had that massive drop creating this bearish 15-minute fair value gap. So this was a very important factor. When price came in, price just played alongside. So some people who trade, the retail concept would have called this is now what they call resistance. As you can see, price was resisting this area, which was initially a support level here. Okay, I don't trade support and resistance, but I know how they work. I've traded them in my past during my early days, but I don't really trade them. But I'm only using this term so that any trader who uses support and resistance can easily get what I mean. So because some people don't understand the concept of fair value gaps, but they understand support and resistance. In one way or the other, trust me, they're kind of similar, because you see, a retail trader is gonna be seeing resistance here. An ICT trader is seeing a fair value gap here. Other people are gonna be seeing order blocks and so on. So that being said, there was this gap, and the price kind of respected it first. You see, we never displaced it. So the only time we displaced above it was later. And you see, when the market has been trying a couple of times, trying to displace and failing, for example, here failing, here failing, here failing, then unfortunately we have a displacement above it that is not as powerful as it's supposed to be, meaning that there's some rejection from that level. So for example, you only come and now wait again, we create another bearish gap. For example, we create one here. So once you create one here, you would have waited for price to come and tap it, which it never did. It kept on dropping, and after kept on dropping, you don't force it. You look for another gap. For example, this one here. Now this one would have been a really good entry for sales. This one here, he had a bearish one, and price was kind of rejecting it. You see, so once you come and it respected it, to get your entry here, put your stop loss above here, and let it run. Target this. There was a period where I think I'd marked somewhere. You see this one? This would have target below here, or manually closed when the market is about to close, because this was still Monday. Okay, you'd have won. You'd have made money. But this was a very dangerous price action on this Monday. This drop here, it was quite dangerous. Trust me. I kind of, I think I was in a trade in that setup. I think I was supposed to be buying in real sense. I made some mistake in here. I think I made some mistakes in here, and I was able to realize it as early as possible and position myself for sales. Once this day closed, I realized that now the market is invested in something lower. And guys, remember, this is not really a good time to trade. Actually, this is like the end of the year. Like, if you're inexperienced, you're not even supposed to be opening this, because during these times the liquidity is low, and apart from liquidity, it's like the price action is kind of, it's kind of scary, because you see, for example here, this all of a sudden drop on a new week, and the next day we expect manipulation on these lows. Does not happen. Instead, the price is kind of wanting to go higher, but it goes to the consequent approachment of that inversion fair value gap, which like, it's kind of crazy. So if you're not really advanced, this was a no way. Don't even do anything about it. And the same thing I expect. So when the market opens this week, don't trade. Today is Thursday. Don't trade tomorrow. In case, yeah, I think, yeah, the market's gonna be open tomorrow, if I'm not wrong. Yeah, they're supposed to open tomorrow. That's on the second. And just don't trade. Don't trade, guys. Don't trade. Let it maybe start trading from next week. And from next week, I've already given you what I expect. Once you see price coming to this bullish period right here, this fair value gap here, now watch how the price action is going to be on this area, especially if the daily candle keep on respecting this gap, like they tap it and close above it. Do not displace the body below. Position yourself for longs. Position yourself for buys with the stop loss just below here, and targeting this initial highs and even all-time highs. Okay, and that's it. How to read price action and how what to expect, on gold apparently. And I wish I would have done some more analysis on Nasdaq and the rest, but I'm not really sure. Maybe you can, leave a comment and let me know which other pair you'd like me to know to analyze for you guys. And see you in the next one. Back at it. Cheers.